Hola guys, and que paso? How's it going? This is Hala Pablo. How's everyone doing? I want to look at Zilliqa right now. Zilliqa, USDT, that pair. This is on the Binance exchange, and I want to just share with you what I'm seeing right now and give you some ideas if you're interested in swing trading Zilliqa or even dollar cost averaging. Uh, this has a lot of interesting things going on, and I'd like to share with you some of the bias that I have on it and why I have the bias. And it's going to tie into a video I did yesterday with the Fibonacci ratios and the liquidity voids, or the bull traps. This is the same sort of thing with a little twist to it, and I'll let you know what I see, and you can make your own decisions based on that. So first things first, let's go ahead and just break down this Wyckoff schematic here that I've done. I shared this with my Discord group this morning. I haven't jumped into it yet, but I am watching it like a hawk. And so, anyways, we came out of this selling climax here, and so many of the altcoins right now are in similar patterns. They almost resemble like ascending wedge patterns, although I wouldn't really call this a wedge, an ascending wedge, because of the bottom, the series of lower highs with these wicks here above trading range support, resistance rather, trading range resistance bumping off the trend resistance have failed to rally, failed to make any sort of advancements past into the exit liquidity void, which would be found in the preliminary support area here. This is where I drew this trap area. So I'm going to explain this in a second, so don't worry. So right now we'll focus on the price action. The price action came out, bounced, hit this low here, the selling climax, came back up. You know that the bounce on it, the obligatory bounce, where that ends and more supply begins to come in, that's known as the automatic rally, which we abbreviate as AR. And then the automatic rally comes back down usually, or I don't want to say usually, but sometimes is safe to say. Sometimes it comes down and it zeroes out, or it mitigates the point of the selling climax, and it basically reconciles this liquidity void on the downside here. So we see that it did that here, and then it bounced back up and forms what's called the secondary tests. So this would be the secondary test line, and the horizontal bar from where the secondary test formed, we can form a floor off of this. So this would be the floor of the trading range. And we see we had some bounces off the floor in between the trend support and the trading range floor here and here. And then it formed this like little triple bottom. This is on a 1 hour fractal. Formed this triple bottom off the trend support, micro trend support, came back up. And this time it actually went through the trading range resistance. At this point it was resistance, and it flipped it to floor. And by doing so, it formed sort of like what looks like an inverted head and shoulders, which is it's a bullish continuation pattern. But it got stopped out here at this sell order block at 0.2347 cents, this area around here. And this was an area that the market makers began taking, dropping supply. And so we had this little bounce in between the trading range support now and the sell order block. And every now and then they would shoot the price up with a demand test to see what the demand was, hence the test. And what it would do, it would bounce off a certain area and begin to form what's called the micro trend resistance. And what's interesting to look at is in the vertical bar volume where these wicks come up. Of course, wicks or upper shadows are signs of rejection. They're signs of bearish rejection. So the bulls are trying to pump the price, and the bears are pushing back down. And at the close of the 1 hour period, we see that the that the candle is well below, the close price is well below microtrend resistance. And in the sell block area, it goes back down into the sell block area. It's trying to overcome it. It's trying to prevail. It keeps getting pushed back. So we have failure to rallies here, despite these big volume spikes in demand. Here's another one. Here's one. You see it at each failure to rally. You see a significant volume boost in the demand. Yet the effort in the demand in the buy orders was not enough to prevail through microtrend resistance, so it gets bounced back with a shadow or a wick, a rejection wick. So here we see, and all along it's obeying the confines of the floor with the microtrend support. And the candles are getting narrow and narrow, and the spread's getting smaller and smaller. This is a telltale sign of absorption of what we're seeing here. But what clues me in that this could be a redistribution range is the overall diminishment of demand. So you remember all these spikes where the market makers are trying to propel the price. They're basically testing to see if there's value above certain areas, and it keeps getting stopped out at this forming this series of lower highs, hence this support area. As the price action meanders towards the confluence of this geometric shape, the demand volume spikes are getting smaller and smaller in scope. They're basically diminishing in scope, forming a divergence. If you see, here's the top. This one's a little smaller and smaller and smaller yet. So it forms like a downward angle, an ascending angle, like a descending slope. And this is in divergence to the series of higher lows. So when this happens, it's basically a confirmation of the power of the bears. So it's bearish overall. So my projection of this would be bearish. We do see every now and then, we do see supply also picking up a bit, like here along the microtrend support. And they're keeping the price above. They're not wanting to dump the price completely yet. They're trying to see if there's a demand in this. They don't want to drop the price and then have a whole bunch of buyers come in and buy the price at that low. That kind of defeats their campaign of speculation. So they're careful to keep the price within this geometric shape, and every now and then put out tests. Like you see, like right here, here's a supply test. They're testing supply as they're getting near to the end of this confluence here, or this apex of this triangle. Look at this big supply spike, and in contrast, look at the effort here. This is a lot of effort. This is a lot of sell orders, and here is the actual movement of the price. So all this selling right here hardly moved the price down. So that means that there's still value. This Zilliqa coin still has value, and it hasn't moved. So they're holding it here to see what's going to happen. And so because of this is actually a sign of strength for the bulls. So when you see a lot of effort in supply, but a meager result in the price action, that's usually a weakness. The same thing goes for demand. If you see a lot of demand, a lot of buy orders, and you get this huge spike and then the price hardly moves, that's actually a sign of weakness for the bulls. And it means that the price is probably going to start retracing soon. So flip it around on this, and I can imagine here that the price is going to continue to mark up, and it may bounce. We may get a bounce. It may go back up into the sell order block and then sell off. If it goes through and somehow prevails through this supply block, then we have to be careful, because they're probably going to head for this preliminary support zone here, and where I believe they would take liquidity. Remember, the overall bias on this range is bearish. It's a bearish That's why I'm short on this coin right now, even though we may have a micro rally up here, but this would be a bull trap, I believe. And only, once the FOMO traders buy in here, the market makers will begin offloading supply en masse and drop the price down. And that's when we could see the price go and just fall into the Fibonacci retracement range. Now, it may not go up at all. It may just continue to bounce off the micro trend resistance, bounce around in this triangle, and then fake out for a little bit, maybe go up here, grab some liquidity, and then drop without actually going all the way up to this macro void up here at the 0.026 area, cent area, and drop down and begin dropping down into the Fibonacci range. So we need to be prepared for that. And if, like I said, if Zilliqa is a coin that you're interested in, then really good dollar cost averaging zones would be at the 1 Fibonacci, the 1.272 retracement, which would be the 0.0204 area. And then the golden, of course, fib retracement area would be the 1618, which would be the 1 cent 0.1924 is where I would be an ideal buy, I think, if especially if this is a coin. And that would also be a triple mitigation for this liquidity void going all the way back to the selling climax. So anyway, that's what I'm looking at. Keep an eye on this if you're into this sort of coin and you're hodling this. I know Zilliqa is one of these hot coins that people like, traders, investors like to hold on to. So anyway, if you found this informative, good. I'm glad that you find this resourceful, and I like teaching. And so go ahead and if you got something out of this, subscribe, and let me know what you think, and I'll be sure to send some more updates. I'm still working on some Bitcoin, Ethereum, updates. I try to do those every three to 4 days, unless there's a drastic change of character in either one. Then I'll try to get something out to my group first. Then I'll upload a chart to TradingView, and then lastly, I'll try to put something on YouTube here for everyone else. But so anyway, check me out, and you can check my chart history on the TradingView website. It's Hala Pablo. Just type in Hala Pablo, TradingView, and you should be able to pull up all my charts. I've got almost 400 charts on there. Win rates between 80 to 85%, just using volume price action. I don't clutter my charts with all kinds of indicators and everything. And I try to show you what I'm doing and try to, annotate all the volume spread price action reads on the Wyckoff schematic. So anyway, that's enough for me. Let me let you go. I got to run. And all right, guys, we'll talk to you later. Have a great day, and adios. All right, man. Bye-bye.